Can you see the question and solution file?
Yeah.
Okay. So this is the question number one. I think question number one is more comprehensive than question number two. Therefore, I have
Mhm.
selected question number one because this is so comprehensive. Question number two is comparatively easy. And in question two, the examiner has not asked to prepare budgeted income statement or budgeted balance sheet. So therefore, I have selected question number one because in this question, all possible operating budgets and all possible financial budgets are asked to prepare. So I'm
Okay.
just starting question number one. So he's saying the management of Johnston Company has asked you to prepare a master budget for the company from the following information. So in fact, master budget is not a single budget. Master budget is the set of different budgets. The set of different budgets, the set of operating and financial budgets is known as master budget.
Mhm.
So if you have been asked in the examination that what is master budget, so you can just explain in this way that master budget is the combination of operational and financial budgets. So operational budgets includes the sales but revenue budget, the production budget, the variable overheads budget, the fixed overhead budget, the cost of goods sold budget, admin operating expenses budget, and financial budgets include cash budgets and budgeted balance sheet. So next, the budget is to cover the month of April, May, and June. So this is the important information we will focus on. So the first point we have just considered that we are going to prepare budget for second quarter, and this second quarter includes months from April to June. So there are total 3 months in our current budget. So it means this duration from April to June will be termed as budget period. So this will be budget period. So the examiner can also ask you question about the budget period, that what is budget period. So you
Mhm.
can just simply explain it in this way, that budget period is the duration for which we are going to estimate our revenues expenses. So in fact, this is the budget period. So in this question, our budget period is quarter two, and it includes months April to June. So next, the examiner has just provided you some balances of balance sheet. The first
Mhm.
item he has provided is cash. The
Yeah.
second is accounts receivable. Do you know about accounts receivable?
Mhm.
Yes, these are the customers from whom we have to receive money in the future. So next is inventory. This is the closing balance of inventory. Then this is the total current assets. Then there is a equipment, and we have just subtracted accumulated amortization. Do you know about accumulated amortization?
Is it depreciation?
Yes, exactly. It is the depreciation. But normally, the word amortization is specifically used in Canadian universities and some books from the Canadian authors. But in America and UK, they normally use word depreciation. So you
Mhm.
can just keep in mind as a sense that accumulated amortization and depreciation are same. So what is the
Mhm.
meaning of accumulated depreciation?
Um,
In fact, it is the amount of depreciation that has been charged in the previous years. So
uh,
the total, let's suppose, in fact, we have to consider this point again and again in the question. So therefore, I am just explaining it. You have purchased your asset equipment in 2009, and the cost of that asset was 50,000. Then you have used that asset in 3 years, 2020, 2021, and 2022. And due to use, in 2020, your asset decreased by 10,000, so your depreciation is 10,000. Then in 2020, the depreciation, 21 depreciation is again 10,000. In 22, the depreciation is again 10,000. So at the end of 2022, the total depreciation so far you have charged on that asset is 30,000. So this 30,000 will be known as accumulated depreciation.
Mm-hmm.
It
Okay.
means the total depreciation you have charged so far is the accumulated depreciation.
Mm-hmm. Okay. And
So
the accounts receivable is for customers from whom we will receive money in the future.
yes, exactly. And then there is an inventory. Inventory is the ending balance. You can just say that unsold goods, unsold stock.
Mm.
Just let me know if you have if you don't have enough knowledge about any concept, because we will use all these terms again and again. So just be focused, just ask here. It will be easy for us if you will ask here, because when we will start question, that it will become a more complicated by time and time.
And for equipment is what?
Yes, equipment is an any equipment like computer equipment, might be some printing machine. So it's a general term, equipment, any equipment which is used in the business.
Mm. Okay.
So next, there is an accounts payable. So accounts payable are the persons to whom we have to pay in the future. Accounts receivable, we have to receive in the future, and accounts payable, we have to pay in the future. So
Mm.
accounts payable is liability and accounts receivable is asset.
Yeah.
So next, short-term notes payable. So notes payable is also you can say a type of payables, but these payables are the payables for which we have just made a written agreement. So these are terms as notes payable, and we also need to pay a specific rate of interest on notes payable, but interest is not paid on accounts payable. So then there is a long-term notes payable. Long-term notes payable are the payables we need to pay after 1 year. And if we have to pay the note in within 1 year, it will be known as short-term notes payable.
If it's always 1 year.
Yes, in fact, if we have to pay the notes payable within 1 year, it might be 1 month, 2, 3, 4, 8, 10. But if we need to pay after 1 year, it will be known as long-term notes payable. Have you got it?
Yeah.
Okay. So next is common shares. Do you know about common shares?
No.
In fact, common shares is the investment by owners of the business. This investment is made by the owners of the business. Do you know about shares?
Yeah.
Okay. So it is in fact the investment of investors into the business. These are known as common shares. So next, there is a retained earnings. Have you any idea about retained earnings?
No, I don't remember.
In fact, this is the previous year's profit you have just retained in the business. Is known as retained earnings. So just take an example that you are just running a company, and in year 2021, your company has generated profit $40,000 profit. And from this profit, you have just paid 20,000 dividend to your investors who invested their money into the business. So after payment of 20,000, still we have 20,000 profit, and you just retained that profit into your business. It is known as retained earnings. So you can
Okay.
say that the earnings you have not paid to your shareholders, but you have retained them into the business, and these are known as retained earnings. So next, there is a supplementary information, but we will use this information later on when we will go to solve that questions. Let's come towards the requirement. So in the requirement, first of all, we need to prepare sales budget, and that is saying including sales for July. So as we have already discussed that we are preparing the budget for the budget period, which is starting from April and ending on June. But in sales budget, it is required that we also need to prepare budget for the July.
Okay.
So this is the format of budget, sales budget. So our budget period is starting from April. So this is first month, April, then May, then June. And next is the total of quarter. So this is the format of sales budget. We will use all the required information from the question. So in the sales budget, first of all, we need to write the budgeted units sold. So in the point A, he has just provided you the information which we will use in the sales budget. Just look at the question. He is saying unit sales for March are 10,000 units. So we will write down here that in the March, we have just sold 10,000 units. After that, each month's sales are expected to exceed the prior month's results by 5%. It means that in every month, the sales will increase by 5%. And then he's just said the selling price of the product is 25 per unit. So first of all, we need to calculate the units sold in each month in April, May, and particularly in June. In the previous month, in the March, the units sold were 10,000 units. And the increase in units is just said to be 5%. So 10,000 into 5%, and it will be 500. It means in the April, the quantity of units sold will be 10,500. Have you got it?
It says that the sales of
Yes, exactly. Units sold.
each month's sales. Isn't sales the revenue? So each month's revenue or
No, in
exit.
fact, in fact, revenue is based on units sold. How many units you will sell? He is just starting unit sales. Unit sales for March are 10,000 units. And then he
Yeah.
is just saying each month's sales are expected to exceed the prior month's results by 5%. He is saying that in March, you have just sold 10,000 units. And in next 3 months, you are expecting that the units sold or sales will be 5% higher than the previous month.
So it's for units sold, 5%.
Yes, exactly. It might be same if whether it is for sales or for units sold, because we are just placing the units sold in the sale budget first. Therefore, we have just gotten that this 5% increase in the sense of units sold. Sales are also based on units.
Yeah.
So have you got it at how I have calculated 10,500?
Yeah.
Okay, just add 5% into it and calculate the budgeted units sold for May. Do you have calculator?
Yeah. So for May, add 5% to the previous one.
Yes, exactly. You can just multiply it by 1.05. 10,005.
11,025.
11,025. Okay. Now calculate for June.
11,576.25.
Okay, we will take it as 576. Okay, then calculate for July.
12,155.
Okay. In next budgets, we will not prepare budget for July. But in this requirement, the instructor has just asked us to prepare the budget for July as well. You can see the requirement, sales budget including sales for July. So now calculate for the quarter, that in the quarter, how many total units we will sell?
30,
April, May,
33.
and June.
33,101.
Okay. So next, we will place budgeted sale price per unit. So budgeted sale price is also mentioned in this point A. So budgeted sale price is 25 per unit. It is $25. And the budgeted sale price will be same in the all months. Now we will calculate budgeted sales revenue. So you just need to multiply 10,500 into 25 to 62500. Can you please calculate next value?
275,625.
625. Okay, next.
2 289,400.
289400. Okay, next.
Next is the total of all of what we just did.
Yeah, yes, exactly. So this is our sales budget, from which we have just calculated that how much our budgeted sales revenue will be in next quarter, in quarter 2, from April to June. Do you have any question about sales budget?
No.
Okay. So our next budget is purchases budget. So in purchases budget, first of all, we will place budgeted units to be sold. We have just written our previous requirement in sales budget. So this is the quantity we have budgeted to sell in next quarter from April to June.
Wait, what?
Yes, please.
So what is purchases budget?
In fact, purchases budget will explain that how many units we need to purchase in next quarter. Have you got it?
So
Hello.
we're taking the units sold from the last.
Yes, exactly. From the sales budget.
Why are we taking it from there?
Because the formula to calculate the units purchases is budgeted units sold plus ending units minus opening units.
Oh,
So let's take an example that if you are doing a trading business and your business is to purchase some material and sell that material to your customers, then obviously your sales will be based on purchases.
yeah.
If you are purchasing too much, if you are selling too much units, then you have to purchase too much units. If you are selling just a small quantity of units, then you have to purchase a small quantity of these units. Because the retail business is just purchasing of goods from a wholesale supplier and selling it to your customers. So therefore,
Mhm.
when we will prepare purchases budget, then this purchases budget will always be based on sales. If you're selling very few quantity, then you have to purchase few quantity. But if you are selling a huge quantity of units, then you also have to purchase that specific quantity from your supplier. So these two
Mhm.
are generally interconnected with each other. Okay.
Mhm. Yeah.
So first of all, we have just written down the budgeted units to be sold. So in these budgeted units, we will add ending inventory of units. So now we will check that what information the examiner has just provided about the ending inventory of units. Let's go to the point B. So in the point B, the examiner is saying the company's policy calls for the ending inventory of a given month to equal 80% of the next month expected unit sales. So this is the main point I am just highlighting in red. In this point, the examiner is just saying that the ending inventory of every month will be equal to the 80% of next month's expected unit sales. Let's suppose if we have 11,025 unit sales in May, then how many units we have to retain in ending inventory during the month of April? I'm just repeating the question. If you have 11,025 units to be sold in May, then how many units you need to keep in ending inventory in the month of April?
80% of it.
Yes, exactly. So just calculate 80% of May and it will be the ending units of April.
8820.
Yes, 8,820. Next May.
So this May is for 80% of June.
Yes, exactly.
926. 9261.
9261. Okay. And for June, we will use the units of July. That is the main reason. Due to this, the examiner has just asked us to prepare the sales budget of July as well, because we need to calculate the ending inventory of June based on July sales.
Yes, so 9724.
9724. So next, we will subtract the opening inventory of units. So I'm just reading the next statement from where we have just left out. So he's saying the March 31st inventory is 8,400 units. So it means this is the ending inventory of March. March 31st inventory is 8,400, and this ending inventory will be the opening inventory of April. Have you got it?
Yeah.
If we have ending inventory in December, the same inventory will be the opening inventory of January. So same like this, in the April, we have opening inventory of 8,400 units. Now, my question is that how much will be the opening inventory in May?
Is it the same?
How many units?
8,400.
No. In the May, let's first of all see at the April column. In the April column, we have ending inventory of units 8,820. This ending inventory of April will be the opening inventory of May. So this is the answer, 8,820. In the next
Okay.
month, in the month of June, the opening inventory of June will be the ending inventory of May. So in the May, we have ending inventory of 9,261 units. So these units will be the opening inventory of June, 9,291. You can just take 5 seconds and ask me any question if you have regarding purchases budget.
Isn't it 9,261?
Yes, 9,261.
Yeah. Okay.
So now we will calculate units to be budgeted units to be purchased. So
Purchases are added.
no, it is just the answer of this purchases budget, last call. We don't need to add subtract. First of all, we will take budgeted units sold. Then we will add ending inventory and subtract opening inventory. The answer will be the units we need to purchase. So add 10,500 into 8,820 and then subtract 8,400.
And 920.
10,920 for next May.
11,466.
11,466. Then in the June.
12,039.
12,039. Now you can total all these units, budgeted units to be purchased.
34,425.
Okay, now these are in fact the units we have to purchase. In the point B at the end, he is saying the purchase price is 15 per unit. Now we need to calculate, first of all, we have calculated that how many units we need to purchase, but now we will calculate the total amount of purchases. So to reach at total amount of purchases, we need to multiply units purchased with the per unit purchase price. So we will write here that budgeted purchase price. So budgeted purchase price is $25 per unit. So the answer will be budgeted purchases for second quarter. So just multiply units with 25.
One 63800. No, it's for this one, it's with $15.
Sorry. Okay.
163800.
163800. And next one?
171990. The next one is 180590.
180?
Yeah. 590.
Okay. Now you can just total. Total of these three values.
516380.
I just want to ask that is it possible for you to split the 2 hour classes into 1 hour classes?
Sorry?
And if in fact I want to keep the maximum time of each class 1 hour.
Why?
In fact, these all things are just messed up, and we need to explain all these things in a single lecture. So it will be easy for you and for me as well to explain in 2 different lectures. Is it possible for you? We can schedule a class on consecutive 2 days for each topic. So I will explain some topics in 1 hour class, and you can just review the topics we have just discussed in one class, and I will discuss the other topics in our next class in the very next day.
But then how will we discuss the questions?
Yes, exactly. It will be possible. We will start the question from there we have just left out.
No, I mean when if with 1 hour class, how can we solve a question if we're explaining topics?
In fact, I am just saying that we will solve some basic parts in one lecture and some other parts in next lecture.
And you don't want to do 2 hour class anymore?
In fact, it's almost 10 p.m. here, and time is just a little bit difficult for me to handle this duration class, because I have just managed almost 6 hours classes today.
We can do them in more 2 hour classes in morning your time more often.
Yes, it will be more convenient for me. In fact, nowadays there are exams in Australia. So most of the universities in Australia are just conducting their examination session. So I have just managed different classes for different students from Australia. So therefore, I am just feeling tired at that time. So it will be easy in coming days for me to manage classes in morning.
Okay, we can do 2 hour classes in morning then. That's fine. Morning your time.
Okay.
But 2 hour classes in morning is fine, right? Because for me, I prefer 2 hours usually. Is that okay?
Okay. So if it is convenient for you, we can just proceed 2
Yeah,
hours
for me,
classes.
yeah, it's fine for me.
Okay. So this is the so is it possible to handle the next 1 hour class in the morning if it is comfortable for
Yeah.
you?
Oh, today, I don't think it's possible today, actually. But can you finish this topic today or right now?
It will be more convenient for me if we can just schedule our remaining 1 hour and 10 minutes class in my morning.
Okay, what time?
Mm, will it be possible for you to manage your time at by 7 to 8 a.m. or 6 to 7 a.m.?
Yeah, I'm okay with 6 to 7 or 7 to 8.
So we can just schedule at 6 to 7.
Okay,
So
sure.
so in the morning, I will spend 1 hour and 15 minutes.
Yeah, okay. We can finish this question and
Yeah.
go over the remaining slides.
Yes, exactly. Hopefully, we will finish this question.
Yeah, I want to finish this question.
Yes.
Yeah.
So you just need to revise the slides we have just discussed in today's lecture, and then just revise the sales budget and purchases budget, and just select the questions you want to ask. Then we will
Okay.
proceed from the. In fact, the remaining parts are just complex, and I am not feeling too much comfortable to discuss all these topics. So it will not be too
Yeah.
much beneficial for you and me to
Okay,
discuss
okay.
all these topics in such a condition. So it will be
Yeah.
more beneficial for us if we will discuss in the morning.
Okay, okay. Because for the next few days, I want to have consecutive classes because I think I'm behind in 3 lectures in the class, so I want to catch up on it.
It's okay. In fact, this budgeting topic is it's not a small topic, and I usually take almost 8 to 10 hours to finish this topic. So, in fact, according to your conditions, I have to manage things in you can say in very quickly. So
Mm-hmm.
therefore, because it's not an easy task to discuss the theory of a single topic and a single class and questions and numericals as well. But I am just trying my best to just streamline my pace with your requirement. But
Mm-hmm.
it will be convenient for me if you will be able to take more classes. I can just give you some discount if you are just looking to some relatively you can just cheaper charges. So I can just give you some discount, but please expand these lectures because it is not possible to manage these advanced topics in just 2 hours. So it will not be more beneficial for you. I don't have any problem because I can just discuss, explain all these things, whether you are just picking or not. I will keep moving on. But it will be beneficial for you if you will just expand the duration of each topic. So according to me, there must be 4 hours for each topic. First of all, I will explain the theory in first 20 to 25 minutes. Then I will explain the procedure of numerical with a simple example. Then we will just move on towards the complex questions. In fact, these questions
I,
which are just provided by the instructor are some complex questions. So when we will just from the start move to the complex question, it will confuse you. So it will
I think
not be easy.
when we did the activity-based costing, job order costing, I think it was fine for me.
Yeah,
And even now it's okay for me.
yeah.
I don't think it's possible for me to have a 4 hour, like,
Mhm,
because I have to do so many other things too. So I think
mhm,
I think 2 hours is okay. Like if I have a, you can go at this pace, and if I have a question, I can just ask you in between.
mhm.
So far, it's okay for me.
Okay, okay. If it is comfortable for you, because the activity-based costing and job order costing, you can say a simpler topic than this budgeting, but we will try our best. I will also
I
try
think
our best to explain all these things.
I think it's okay. We can, like, in the morning, in your morning, we can finish this one question and
Okay,
review the slides. I think it'll be okay.
it's okay. Okay, then we will meet in the morning from 6 to 7.
Okay. Okay.
Okay, by then.
Bye.
And we need to calculate budgeted cost of goods sold for each month and the quarter and the cost of June 30th budgeted inventory. It means that June is the last month of our budget period. So, in fact, the inventory we need to calculate is, in fact, ending inventory because it is at the end of our budget period. So, we need to calculate this ending inventory as well. So, first of all, we have calculated the purchases budget and we came to know that the budgeted purchases for April will be $163,800 and for the May, this will be 171,990, and for the June, it will be 180,590, and the total of quarter purchases will be 516380. So this is the estimation of the goods we need to purchase to fulfill our sales volume.
Mhm.
So next, we need to calculate cost of goods sold. So we will calculate cost of goods sold, and cost of goods sold is also needs to be calculated for separately for all months and for the quarter as well. So this is easier to calculate than purchases. So we need two things. First of all, we need budgeted units to be sold. That how many units we have estimated to sell in this budgeted period. And secondly, we need budgeted cost per unit. So in this question, we already have budgeted units to be sold. So we have used the same units in sales budget and purchases budget. So I am just placing here the budgeted units to be sold. Next, we already used the budgeted cost per unit, and budgeted cost per unit is $15. So when we will multiply these two values, the answer will be budgeted cost of goods sold. So just multiply 10,500 with 15 and let me know the answer.
157500.
157500.
165375.
375. Okay, next.
173644.
Okay, so just take a total of this value.
496519.
496159.
519. And so we're to find cost of goods sold. We're finding the cost of goods sold for ending inventory. So ending inventory is just the same units times the price.
Yes, exactly. But in ending inventory, we used to take ending units. But in cost of goods sold, we are taking units sold into cost per unit. So this is the basically difference between cost of goods sold and ending inventory. Just look at the second budget, purchases budget. In the purchases budget, you can see in the second row, we have used ending inventory of units. So
Mhm.
ending inventory of units, we need to maintain in April is 8,820 units. In May, it is 9,261. And in June, it is 9,724. So now we need to calculate the cost of June 30th budgeted inventory. So we will calculate cost of 30th June budgeted inventory. Can you please tell me that what is the quantity of budgeted units on 30th June?
11576.
No, it is the sold. We need to check the ending inventory of units on 30th June. We already discussed this in our question.
9724.
Yes, exactly. So we just need to calculate the cost of these units. So first of all, we should know about the number of units. So we will write it down as ending inventory of units on 30th June. So this is 9,724 units. And we will just multiply it with the cost per unit. So the cost per unit is same as we have used in our last two budgets, and it is 15. When we have cost of goods, cost of units, then this will be the ending inventory of 30th June. Just multiply these two values.
145860.
145,860. So all the values we are just calculating, we will compile these all values in budgeted income statement and budgeted balance sheet. So first of all, we are just preparing the budgets according to the requirement. But then we will use same values in the same requirements, requirement number 8, requirement number 7, and requirement number 9. So just ask me any question if you have so far.
No, it's fine so far.
Okay, so next we need to prepare budget number 3. So budget number 3 is the operating expenses budget. So he has also mentioned that you need to include the selling and general and admin expenses. Format also almost will remain same because we are just calculating for quarter and separately for months. So we just need to accumulate the cost of all the operating expenses just mentioned in the question. So let's look at the question. So in the question, there is a next point. We have just used the information in the point number A and point number B in our first two budgets. Then in the information point mentioned in point number C, he is saying sales representatives commission are 12.5% and are paid in the month of sale. So this is the first operating expenses he is just telling about. So the first operating expense will be sales representative commission, and this commission is 25%. Sorry, 12.5%. And sales representative commission is always applied on sales. That how much sales a sales representative has made, the sales he has just made will be given with 12.5% commission. So first of all, we should know about the amount of sales in all these months and total in quarter. So we have just calculated the budgeted sales revenue in our first requirement. So in the April, the budgeted sales revenue is 262,500, and May, June, and then end of the quarter. So if we will calculate the 12.5% of all these amounts in different months. So in the April, we have just made the sales revenue of 262,500. So we will calculate 12.5% of that amount to reach at the commission for the month of April. So please calculate 12.5% of April sales revenue.
Okay. 12.5 times
12.5%.
With the sales of April is
262,500.
yeah, 1 second. 32,813.
32,830. Next, for the May, we have sales 275,625. Just calculate the commission.
34,453.
34,453. Then next, we need to calculate the commission for June.
36,176.
36,176. Now just make the total of quarter.
Hmm. 103,441.
Okay. Next, the next information he is just providing. The sales manager's salary will be $3,500 in April and 4,000 thereafter. So the next expense we need to budget is the sales manager's salary. So in the April, the salary will be 3,500, but after that we will increase the salary of sales manager and it will be 4,000. So for the total, for the quarter, it will be 11,500. So next, in point number D, he is additionally providing you the details of operating expenses. The general and administrative expenses include administrative salaries of 8,000 per month. It means that every month we need to pay the salaries of general administrative staff. So we will write down it here as general and administrative salaries. So general and administrative salaries will be 8,000 per month. We will write down 8,000 in each month, and the total for quarter will be 24,000. So next, he is saying amortization of 5,000 per month. As we already discussed, that this is the depreciation for each month, and this depreciation is on equipment we are using on monthly basis. So this will be the depreciation, or just let's write some amortization. Amortization of equipment, and this amortization is 5,000 per month. So for the quarter, it will be 15,000. Next, he is saying and 0.9% monthly interest on the long-term notes payable. So we will make a working for it. Interest. We will write down it as monthly interest on long-term notes payable. And this monthly interest will be 0.9% of long-term notes payable. So for this, we have to refer to the long-term notes payable value, which is given in the start of the question. So you can see the value of long-term notes payable is 200,000. Can you see?
Yeah.
So just take 0.9% of 200,000.
$1,800.
1,800. So this is the interest we need to pay every month. So next budgeted operating expense will be interest on long-term notes paid. We need to pay 1,800 every month. So just calculate the total for quarter. 1,800 into 3.
$5,400.
So we have just posted the information provided in point D. Now I am just moving to point E. So now we will confirm that whether there is any other value of operating expenses which we need to budget. So in the point E, the information relating to sales is available, but not about expenses. In point F, there are no expenses. In point G, there is no expenses value, and in point H, we don't have any expenses value. In point G, he is just saying the minimum ending cash balance for all months is 50,000. He is saying that the minimum balance we need to maintain at the end of each month, the balance of cash we need to maintain is 50,000.
I can only see one screen.
Is it happen now or from the start?
No, just now.
Okay.
Yeah, now it's fine.
So he is saying that we need to maintain minimum at least 50,000 amount of cash balance at the end of each month. But if we have a low balance, just suppose that if we have 20,000 actual balance at the end of the month, then we need to borrow the money with short-term note, the extra money we needed to reach at 50,000 minimum balance. So the amount we will borrow will be charged at 1% interest rate. I'm just reading the point G. The minimum ending cash balance for all months is 50,000 if necessary. If necessary means if we have low on balance, then we need to borrow that money. If necessary, the short-term notes will require an interest payment of 1% at the end of each month. So we can also budget the interest on notes payable. But so far, we don't know we don't know about the amount of the short-term notes payable. Because when we will prepare our cash budget, then we can estimate the amount needed for the interest on short-term notes payable. So when we will just prepare the cash budget, then we can just know that how short we are in our balance of 50,000 and how much we need to borrow. When we came to know about the amount we need to borrow as a short-term note, then we can calculate the amount of interest. So for the time being, I am just leaving it blank, interest on notes payable. When we will prepare cash budget, then we can place that value. So we can just total the budgeted operating expenses with the given value. Just make a total of April column, May column, and June column, and quarter column. How much is the amount of budgeted operating expenses for April?
51,113.
Okay. For the May.
53,253.
3253. Next. For the June,
54,976.
976. So just make a total of quarter.
One five nine three four one.
So this is the operating budget. Requirement number 3. Next, we need to calculate requirement number 4. And in the requirement number 4, he is just asking to calculate expected cash receipts. Expected cash receipts from customers and expected June 30th balance of accounts. We need to calculate these all values for all months and quarter as well. So we are using the same format we have used so far in our previous budgets. So the information relevant to requirement number 4 is provided in point number E. What is he saying? He is saying 30% of the company's sales, budgeted sales. He is in fact telling about budgeted sales. So we have already calculated the budgeted sales for each month and quarter. So you can see in first budget, in sales budget, we have just calculated the budgeted sales revenue. So he is just telling about this budgeted sales. He is saying 30% of the company's sales are expected to be for cash. It means that 30% sales are for cash and the remaining 70% will be on credit. So one thing we have decided so far, the sales from the 100% sales, the 30% are on cash basis and the 70% are made on credit basis. And when we need to receive the amount from these credit sales, he is additionally providing you the information in the last line. Receivables are collected in full when in the month following the sales. It means the 70% of April sales will be on credit and it will be received in May. The 70% of sales in the May is on credit and it will be received in June. And the 70% of the sales of June is on credit and it will be received in July. So this is basically the implementation of the information provided. So first of all, we need to know that how much we will receive in first month, in the month of April. It means the sales you have just made in the March, the 70% of the March sales will be received in April. So how we can check the value of receivables of March? So he has just provided you the value in the start of the question, accounts receivable. So this is the balance of accounts receivable from the sales we have just made in the month of March. So, first of all, we will receive this amount. So we can just write it down. Received from customers for credit sales. So the credit sales for the month of March are 1,95,000. So in the April, first of all, we will receive this full amount in the month of April. Then it means that we have received the amount of March in the April. Next, we will receive the April amount into the May. So first of all, we need to know about the total amount of April sales. So the amount of April sale is 262500. So we will take 70% of that amount because 30% is on cash. So please calculate the 70% of April sales. And this credit sale will be received in the month of May.
183750.
183750. Next, we need to use the sales of May. And the sales of May, we need to take from the sales budget. So this is the May amount. And from this total sales, 70% is on credit, which we will receive in the following month. So it means we will receive this value in June. How much is the total?
192938.
Okay, just make a total.
Wait, why does it go into the next one? Into the next month?
No, in fact, we need to calculate the amount received from receivables for this quarter. Just make a total. I am just telling you what we need to do for the next month.
Make total of all of this.
Yes.
Five 551,688.
Okay. So now let's discuss about the next month's sales of June. So the sales of credit sales of June, which are 70% of total sales, will be received in July. We have not received so far, but we will receive in July. It means that this will be the amount of expected June 30th balance of accounts receivable. So how much will be the balance? We will take 70% of June sales. So in the June, we have 289400. This is the sales amount. We will take 70% of that amount. So just take 70% of this amount.
Two zero two five eight zero.
20.
202580.
Okay. So just keep in mind the balance sheet we have been provided in this question. You can see the amount of accounts receivable is 1,75,000. So we have just received this amount in the month of April. And when we will prepare the budgeted balance sheet, the revised balance sheet for the month ended June, then we will not place accounts receivable as 175,000, but we will place accounts receivable as 202580 because this will be the ending balance for the June. Have you got it?
Not sure.
It's okay. You can see there is a balance sheet provided in the question at the start of the question.
Yeah.
There is an accounts receivable amount by 1,75,000. It means that in March, we have a credit sales of 1,75,000. And this closing balance of March has been received in the month of April. As you can see on the right side, we have received 1,75,000 of March in the April.
Mhm.
But when we will prepare the balance sheet for the next budget period, for the next quarter, then the balance of 30th June will be placed. So we have just calculated the balance of accounts receivable for 30th June, and it is 202,580. So I want to say that this balance of June 30th will be placed in the balance sheet we will prepare at the end of this question.
Okay.
So next, we need to calculate the amount we will receive from cash sales. What is the percentage of cash sales? Credit sales are 70%, and cash sales are
Yeah.
30%. Okay, we will take 30% of, first of all, we will take 30% of April sales. Take 30% of 262500.
78,750.
78,750, and the sales for the month of May are 275,625. We also have the values. 275,625, take the 30% for May.
82688.
82688. Then for the June, we have sales 289,400, take 30%.
86820.
86820. Make a total for the quarter.
248258.
248258. Now we need to place the third row, and in the third row, we will place total budgeted cash receipts from customers. So just add the cash received from cash sales and credit sales and make a total for the month of April.
Well, for when we do 70% of 262500, why does it go to the next month?
It means that we are receiving the 70% of April sales in the month of May and 70% of May sales into the month of June.
Mhm.
Make a total for April.
Okay. 253750.
Next for the May.
266438.
438. Next.
279758.
279758. In total for the quarter. Okay, we have just completed the fourth requirement. Then next requirement is fifth, expected cash payment for purchases. So in the fifth requirement, the instructor is just asking to prepare expected cash payment for purchases and expected June 30th balance of accounts payable. So first of all, we need to know we need to know about the accounts payable balance in the last quarter. So we have just been provided with the balance sheet of last quarter. And in the last quarter, under the head of liabilities and shareholders' equity, you can see the amount of accounts payable. So the opening amount of accounts payable is 1,56,000. It means that we have purchased goods in the month of March on credit. but we have not paid in the same month. And that amount is 1,56,000. So we will pay this amount in the next month. And the next month will be in the next quarter, and that will be April. So the requirement number 5. And the requirement number 5 is we need to calculate expected cash payments for purchases and the expected June 30th balance of accounts payable. So we will calculate all these values for the months and separately for the quarter. In the question, the point number F is just related to this requirement. So in the point number F, the examiner is just telling you that all purchases of merchandise on credit and no payables arise from any other transaction. The purchases of 1 month are fully paid in the next month. Regarding the sales, the condition was that 30% sales are on cash basis and 70% sales are on credit basis. But in respect of purchases, the condition is somehow different. He is saying the company is purchasing all the things, all the goods on credit basis, and full amount is paid in the next month. Let's suppose that we have purchased goods in the month of March. The full amount for these purchases will be paid in April. The goods we have purchased in the month of April will be paid in the month of May, and we purchased the goods in the month of May. The payment will be made in the June. So first of all, we need to know that how much amount of merchandise we have purchased in the month of April, May, and June. So we need to refer to the second budget, and that is purchases. This budget will exactly tell you that how much purchases we have made in these different months. So you can see in the month of April, we need to purchase 163,800 merchandise. In the May, we have purchased 171,990. In the month of June, we have purchased 180,590. So these are in fact the purchases for respective months, but the condition is that all these purchases are on credit, 100% on credit, and fully paid in the month following the month of purchase. For the April, we will receive month in May. For the May, we will receive month in the June. For the June purchases, we will pay amount in the month of July. So first of all, we need to know that how much we will receive in April. So the answer is very simple. The purchases we have just made in the month of March. So the purchases we have just made in the month of March are not available in the purchases budget. So these purchases amount will be provided in the balance sheet as accounts payable. It means that in the month of March, we have made purchases for 1,56,000 and we have not paid the amount for these purchases. So these are written as accounts payable. So you just can see in the left side, in the brown color, the accounts payable amount is 1,56,000. So first of all, we need to pay that amount in the month of April. Then we will take the April purchases amount and it will be received in May. Then the May amount will be received in June, and the June amount will retain as accounts payable at the end of this quarter. So first of all, I will write here down that we will receive the amount of March purchases, and March purchases amount is 1,56,000 we will receive in May. Then April purchases amount, and the amount of April purchases is 163,800, and we will receive this amount in May. Then May purchases are 171,990, and we will receive this amount in June. So the amount of June purchases will be the amount of expected June 30th balance of accounts payable. So on 30th June, the sale we have made in the month of June, because it will be received in July, so we will write it down as the accounts payable at the end of the quarter. So we just need to make a total for all months. So same will be the total. In the April we receive, we pay 1,56,000, then 1,638,000 in the month of May. In the month of June, it is 1,71,990. Just make a total of the quarter.
491,790.
So this is requirement number 5. You can ask if you have any question. So next is cash budget. So we will also prepare cash budget for the all months. So in the cash budget, the first amount we need to place is beginning balance. So the beginning balance is on 1st April. So the beginning balance will be provided in the beginning balance sheet. You have been provided in the start of the question. So the amount of cash. So the beginning balance for this question is 50,000. Next, we need to make a heading of cash receipts. So first of all, we will place cash received from customers. So from the customers, we have received cash, which is mentioned in the requirement number 4. So we just need to copy these values and paste these values in the cash budget. So this is the cash receipts from customers. Then we will write down the total cash receipts. So it will be the same because we have only one value. Next heading will be the cash disbursements. Cash disbursements are in fact cash payments we need to made in this budget period. So in the first column, we will write down here cash paid for purchases. So we have just calculated cash paid for purchases requirement in the fifth answer. So we just need to copy this value, cash payments for purchases, and write it down here. Next, we also have some other payments. So just look at the payments. Look at the point C. We need to pay the sales representative commission. So we have already calculated this in the operating budget. So the sales representative commission will be this. We will place this value. Next amount we need to pay is the sales manager salary. So the sales manager salary is 3,500 in the first month and 4,000 in the next month. What is the next amount we need to place? Is the general and administrative expenses. General and administrative salaries. And these are 8,000 per month. Now, my question is that what next amount we should place here?
Hmm.
Do you know about depreciation? That is it a cash expenses or non-cash expenses? Do we need to pay the amount of amortization or depreciation?
Uh, no.
Yes. Students normally make a mistake that they also place the value of depreciation in the cash budget. But in fact, there is no cash inflow or
Hmm.
outflow due to the depreciation. But we are paying the
Hmm.
salaries. Therefore, we have just written the amount of salaries here. We are paying the commission. We are paying the cash for purchases. We are paying the cash for manager salary. But we know we are not actually paying the amount of depreciation. We will
Oh.
write this depreciation amount into our operating expenses budget, but we will not place this into the cash budget. So this is the
Mhm.
main point to be noted. Next, there is a monthly interest and we need to pay this interest on long-term notes payable. So we already calculated this amount, interest on long-term notes payable. So we will write down it here. The next amount we need to pay is interest on short-term loan payable. So we don't know about it so far, but we will calculate in this budget. So next is so these are all the cash receipts and cash disbursement. Next, come to the point H. He is saying dividends of 100,000 are to be declared and paid in month of May. So this is another disbursement we need to place. So next is the declaration and payment of dividend. So we need to pay that dividend in the month of May, April and May. So in the second column, we will place the amount of dividend. Next, he is saying no cash payments for income taxes are to be made during the second quarter. Income taxes will be assessed at 35% in the quarter. So no cash involvement for income taxes. Therefore, we don't need to place it in the cash budget. Next in the J, he is saying equipment purchases of 55,000 are scheduled for June. So we will write down it here, payment for equipment, and payment for equipment will be made in the month of June. So in the June, we will write down the value 55,000. Now we need to calculate the total of cash, total of cash disbursement. So just make the total of all these columns. First of all, make the total of April.
So from cash paid for purchases till
Yes, exactly.
202,113.
2021, 2021,
113.
113. Okay. Next month.
Uh, 312,053.
Okay.
276. 966.
276.
966.
966. Okay. Just make a total for quarter for disbursements.
736,131.
Okay. Now, next, we need to calculate a remaining cash after disbursement. So for this, formula will be opening cash plus cash receipts minus cash disbursement. So in the first column for the month of April, we have beginning cash balance of 50,000. We will add this amount into total cash receipts and subtract the total cash disbursements.
Okay, so from where?
From the beginning balance. First of all, we will add beginning balance on the top into the total cash receipts, and from this total, subtract the cash disbursements.
So 253,750
Yes, plus 50,000.
plus we have 50,000
Yes,
minus
minus cash
20
disbursement.
202,113.
Yes, exactly.
101,637.
101,637.
637.
So this is the available cash, or you can say remaining cash at the end of the month of April. Now, in the point G, the instructor is saying the minimum ending cash balance for all months is 50,000. So now we will write it down as ending cash balance. So we need to maintain minimum 50,000 balance. And he is saying, if necessary, so just keep in mind this 50,000 is minimum. If there is a amount above than that 50,000, we will write down that amount. And if it is below than 50,000, then we have to borrow the amount from the short-term notes payable to fulfill the requirement of 50,000 minimum balance. So I'm just reading it again. The minimum ending cash balance for all months is 50,000 if necessary. For short-term notes will require an interest payment of 1%. If we will borrow the amount from the short-term note, then we need to place 1% interest on that amount. If the ending cash balance exceeds the minimum, it means that if the ending balance exceeds the minimum, then the excess will be applied to repaying the short-term notes. So first of all, we need to know that how much is the balance right now for the short-term notes. So you can see in the start of the question, we have a balance sheet, and in the balance sheet, we have a short-term note, and that is 12,000. So currently, we have remaining cash of 101,637. It means this cash balance is above than 50,000. So the amount which is above than 50,000, we need to first of all repay the short-term notes payable. So in this column, we will write down repayment of loan, borrowing of loan. So we are repaying the loan, and we will repay that 12,000. So we have total cash now 101,637, and from this total, we need to retain minimum 50,000. But we have more than 50,000, so it is okay. We don't need to finance more money because we already have the balance above than this minimum amount. So the remaining cash still now is 101,637, and from this total amount, we have just repaid the notes payable, that is 12,000, and after repaying the 12,000, remaining balance will be ending cash balance. So just calculate the remaining cash balance. Sorry, ending cash balance. The remaining cash is 101637. Subtract the amount we have repaid for the short-term notes payable, that is 12,000, and remaining will be ending cash balance.
89637.
8963637. Okay. So this is the ending balance of April. And it is just fulfilling the requirement of minimum cash balance. So if there is amount above than 50,000, then the same balance will be retained. But if we have amount lesser than 50,000, then we need to borrow the amount from the short-term notes payable. So this is in fact the ending balance for the month of April. Next, this ending balance of April will be the opening balance of May. Just take this value to the May. This is the ending balance of May. So again, we will calculate the amount of remaining cash. So the formula for the remaining cash will be add the opening balance of May into the cash receipts and subtract the cash disbursements. So just calculate this value.
So 266438
Plus opening balance, beginning balance 89637,
plus
and subtract the cash disbursement.
89 310,053 44,022.
44,022. So just calculate it again. 89637 2666438 minus 312053.
Wait, 89637
Plus
plus
2666438
minus
312053.
yes, 44,022.
Okay. So how much minimum cash we have to maintain? 50,000 exactly.
50,000.
Do we have exact 50,000 in the remaining cash?
No.
So what we have to do?
Pay
We,
the
no, we have to borrow. Now,
yeah.
in the previous month, we have access and we have repaid our notes payable. But now we need to borrow the amount. So to keep the 50,000 ending cash balance, how much we have to borrow? Just take the difference of remaining cash and ending cash balance.
Mhm.
5,978.
5,978.
Yes. One more thing we have just skipped is the interest on short-term loan, short-term notes payable. I'm just highlighting this value we have just skipped. I'm just checking this interest on short-term notes payable. So in the month of April, interest on short-term notes payable, we need to calculate the interest for that month. So in the month of April, the amount of notes payable is 12,000 as given in the balance sheet. And in the question, the instructor has asked you to charge 1% interest on that amount. In the point G, he is saying the minimum ending cash balance for all months is 50,000. If necessary, the short-term note will require an interest payment of 1% at the end of each month. So we will take 1% of that amount and this 1% will be 120. So it means we need to pay $120 in the month of April. So now you need to recalculate the cash disbursement. The already calculated amount is 202,113 and just add 120 into it. Two zero two one one three
Two 202,113 and
plus 120
202,233.
233. So this will be the total cash disbursement. Now we will recalculate remaining cash. So we just added 50,000 into 253750. Just add 50,000 plus 253750.
50,000 plus
253750 and subtract this cash disbursement 202,233.
101517.
101517 and subtract 12,000 from it.
89,517.
517. So this will be the opening balance. We will take this balance to the month of May. And now add this balance into the cash receipts of May.
So 89,517.
89,637 plus 266,438
Mm-hmm.
and subtract 312,053.
44,022.
89637. 89517. 89517 plus 266,438 minus 312,053.
43,902.
902. Okay. Now we will take difference the 43902 and 50,000. This will be the borrowing of loan. 6,000
98.
and 98. So this amount we need to borrow. In fact, in the May month, we are not calculating the interest on short-term loan because right now, during this month, we don't have any loan. We just repaid the 12,000 amount which was outstanding in the last month. But currently, we don't have any short-term notes payable. So the time is just over.
Mm-hmm.
I have just given you the 15 extra minutes because of split of the class.
Okay.
So we have to schedule some time more again to complete this question and to complete the pending slides.
Yeah. Okay. I'll let you know when I can have class next. Probably maybe tomorrow or day after tomorrow.
Okay. In fact, this time is comfortable for me because I used to get up early in the morning and after saying my prayers, I feel fresh. So I can give you the maximum at that time from 6 a.m. to 8 a.m. It will be comfortable for me.